here. So I just call this session Learning with Friends. Okay. So for this session, I decided to cover a few things. The first thing I wanted to cover was how to spot the direction. So there are different techniques for spotting the direction. And one of them, which I use in addition to looking at the super trend, is Heiken Ashi based trend spotting. So I will discuss maybe 15-20 minutes on how do I use spotting the trend using Heiken Ashi. Then I will get into some sort of an option trading setup. I think this started with Hussein asking, what are the different things you do as part of the option setup. So I thought, let me cover a few things. It's a vast subject. There are different techniques. There are different setups. I will probably cover, I would say, part one. If required, we can get into some other setups later. It won't be possible to cover everything in one session. But there are a few things which I do. I do both directional and non-directional. And typically, I trade with a directional bias. So if I do directional, I have a setup. I'm going to talk about it. I do both intraday and positional. Typically on the intraday, I just do a naked buy or sell. Don't hedge during intraday. Positional, I try to keep hedged position. So going to discuss a bit on that. I'm also going to discuss about one of the non-directional setup, which some of you may be familiar. Obviously, this has been learning through eLearn market videos and some of the other experts who have talked, but I've maybe made some modification to that. So that one is a non-directional strategy I'm going to talk. And then finally, I'm going to talk about some of the best practices I follow with respect to the stock options. Okay. So with that, I think I may not be able to see the chat. So it's okay if you want to ask a question, you can unmute yourself, but please make sure that once you have asked your question, you mute back again. Okay. So let me start with the Heiken Ashi. So far, so good. Everyone is able to hear and see the screen. Just need a feedback. If any of you. Okay.
Yes, we are able to.
Great. So let me start with Heiken Ashi. I'm sure that many of you are comfortable or know the basics of Heiken Ashi. If not, of course, I'm not going to get into how Heiken Ashi candle is computed and the actual arithmetic behind it. But essentially, if required, you can look up in Google and learn more about that. But essentially, I'm going to talk about how do I use Heiken Ashi candles. So as the name suggests, these are the balanced candles, and these cut down on the noise. So when we look at the normal candle chart, there's a lot of green candle, red candle, different sort of candles. There are 25, 30 different combinations of candles, Maribozu, different, you can name it, evening star, morning star, various types. But when you are looking at Heiken Ashi, essentially you are looking at three things. Is the trend bullish, or is the trend bearish, or this is an indecisive area? So these are the three things. And I will show you the actual chart on the trading view also to illustrate my point. But you can drill down all the 25, 30 different combinations of candle to just the three things. Is the trend up, trend down, or it is indecisive? Now, how do we determine that the trend is bullish? So essentially, I will just use the green. You can of course change the color, but green for bullish and red for bearish. And there are two things that you need to look at in the Heiken Ashi candle to understand where we are. One is the size of the body. And it is, depending on the instrument you are trading, and there is no fixed rule, what is big, what is small. But it is visually, you will be able to say whether these are the strong, large candles or these are the small candles. There's no science as such. Based on your visual observation, you can determine. So you need to look at the size of the candle, and then you need to look at if there are upper wicks or the lower wicks on that candle. So the way it works is that if we are in a bullish trend, we are forming strong green candles, and there is only upper wick. If there is only upper wick, there is no lower wick. Now remember, while I'm not going to talk about specific computation of Heiken Ashi, each Heiken Ashi candle starts at open, which is average of open and close of the previous Heiken Ashi candle. So you will see that Heiken Ashi always starts in the middle of the previous candle body. That's by design. And when it starts during that period, it makes high and low. Now, if it is a bullish trend and there is only upper wick, which means that the price made a higher, but it did not close below, below where it started for a bullish candle, that shows that the trend is very strong. So look at the body of the candle and look at the wick. And then you have a gradation. So if you say, what is the super bullish trend? Super bullish would be large green candle with only upper wick. Next level of bullishness would be large green candle, but it may have wick on the both sides. The third level would be small green candle with only upper wick. See, keep in mind that if it is only upper wick, there is no lower wick. That means trend is bullish, right? So that is the third one. And if you have a small body and both sides wick, that means the trend has become indecisive. It is no longer bullish. Now the same thing, I look at the bearish, strong red candle, only lower wick. So in the green, we had only upper wick. In the red, we have only lower wick. So if it is a strong red candle with only lower wick, this is the strongest bearish candle. The second strong bearish candle is strong body, red, but wick on both sides. Then small body, but only upper wick. And finally, indecisive is lower body and both side wick. Okay. So this is how you look at it, and I'm going to show on the chart. But essentially, through this, you can spot if on your chart, on Heiken Ashi chart, you are seeing green candles being formed, and they are not small, they're decent sized green candles with only upper wick. You can be comfortably sure that we are in the uptrend. There is nothing to do. Similarly, if it is on a downtrend, you have the red candles with only lower wick getting formed. You are comfortably sitting on a bearish direction. Now things start changing when the wick is getting formed on both sides, or the candle sizes relatively start becoming smaller. That is the time when you know that either accumulation or distribution is going on. And in a bullish trend, it is possible that there would be accumulation and the trend will resume. So that is I hope it is clear. How do you spot bearish, bullish, and great. Bearish, bullish, and indecisive. Now, how do you take the trade? Okay. So there are two aspects very important here. You need to spot the alert candle, and then you need to get into the trade. So the alert, I will tell you how to spot that. Okay. So as I told you, you can definitely find out how do you spot whether the trend is getting stronger or trend is getting weaker, right? I mean, as long as you're forming either red or green candle with either upper wick or lower wick, and the body is decent size, nothing to worry about. As soon as you spot an alert candle, now what is an alert candle? Look at this second bullet I have written. There are two types of alert candle that you can get. Suddenly you encounter a doji. Doji, of course, all of us know what is doji. I have backtested with a doji being 10% of the ratio, the body of doji being 10% of the total candle length. And that is how I defined doji in my backtesting, which has given me decent results. So that is how I define doji. But visually, you can also know, right, whether it is a doji or not. So doji can be of any color. So let's take an example when we are in the bullish direction. So we were forming strong green candle. Then you suddenly see that some candle has become smaller, or it may not even become smaller, but suddenly you see a doji getting formed. That is an alert signal for you. That doji can either be green doji or a red doji. It does not matter. It can be any color. Color of the doji doesn't matter. But the fact is that there was a doji that is made. So that is one type of alert. The second type of alert is non-doji, but a candle of the opposite color. So we are in an uptrend. We were forming green candle, and suddenly you see a red candle getting formed. And please keep in mind, I'm talking only Heiken Ashi chart. I'm not talking about the normal candle chart. So on the Heiken Ashi chart, we were on an uptrend. and there is a red candle getting formed. Whether it is doji or it is a bodied red candle, doesn't matter. It's a reversal sign. Okay. So reverse in the case of bearish, we were on a bear trend, we were getting red candle. Now we see a doji of any color or we see a green candle. As soon as we spot that, we need to be alert. Okay. We still don't have to turn our trade, as in flip our trade, but we need to probably move our stop loss. So that is one way we can do a trailing stop loss. There is another way using fractal, which I trail, and that fractal one gives little better result, and I'll talk about that. I hope so far it is good, right? So we spotted the trend. We knew whether it is bullish or bearish. If it is indecisive and we are starting, we don't have to do anything. We get in the trade. I mean, that's the first time. But once you are in trade, then that indecisive part could also be an alert signal for you, because it could be a doji or it could be a candle of other color. I'm just calling it a reversal candle. Okay, so you got an alert. Now, after you got the alert, there are only 3 possibilities after you get an alert. And that possibility you have to check on the next candle. Please keep that, please pay attention to that. Okay. So look at the third rule. You have to necessarily wait for a confirmation. You are not going to take a trading decision based on only alert. That will be premature. So you have to wait for confirmation. Okay. Now 3 possibilities can happen after getting an alert. Possibility number 1 is that we get a trend reversal. Possibility number 2 is that the alert gets voided. You know, it again comes back to the same direction in which the trade was already there. Or the third possibility is that after the alert, we get another candle, which is also an alert candle. It still does not meet the confirmation criteria. So these are the 3 possibilities. These are the only possibilities. There cannot be a 4th possibility. So let me go through each of the possibilities one by one. Assume that we get a trend reversal. So how do you say that there is a trend reversal and we have got a confirmation candle? Now recall that I said there are only 2 types of alert which is possible. Either it is a doji alert or it is a reversal alert. And reversal alert is a candle of an opposing color than the trend with the body, not a doji. In case we got a reversal candle, okay. So take a scenario where we were in an uptrend, bullish trend, and we were getting this green candles one after the other. Then we saw a red candle with a body, not a doji. We saw a red candle with a body. So now that is a reversal candle, and that is an alert candle for us. Now the next candle that gets formed, if that is also a red candle and the close is below the body close of the previous alert red candle, then we get a confirmation. So the rule is the close in a short trade, the close below the body close of the reversal candle. And of course, in a long trade, it will be opposite. Close above the body close of the reversal candle. Okay. If you are going, so essentially you were long or short, and now you are changing the direction. To change the direction, first you waited for an alert candle, and then you are now getting a confirmation. Confirmation rules are different if it is a reversal candle or it is a doji candle. In case of reversal candle, you compare with the body high or low. Assume that alert was a doji. So in case of doji, there is hardly any body to compare. Okay. So you look at the doji as in full candle high or low. So if you were in a short trade and you got a doji, that doji could be a green doji or a red doji, doesn't matter. You got a doji. The next candle was a green candle closing above the high of the doji. And everything which I'm talking is happening on the Heiken Ashi chart. You're not looking at the normal candle chart. Please keep that in mind. So that is the rule for confirmation. Breaking the high or a low in case of a doji, breaking the body high or low in case of a reversal candle. So if that happens, then you got the confirmation, you flip the trade. You exit your existing trade, whichever direction it was, And you can take trade in the opposite direction because the trend has changed. The second possibility that you don't get the reversal, this condition that I talked about, you don't get it. What happens there? You get, let's say you were in a bullish trade and you got a green doji or a red doji. So that is the doji, or you got a red body, which is a reversal candle. After that, the candle which got formed was a bodied green candle. So you were in a uptrend, okay, and you got an alert, but the next candle did not give you a confirmation. Rather, it continued with the trend you were in. It was a bullish candle. And similarly, if you were in a bearish trend, you got a reversal or you got a doji, but the candle after that became a bearish candle, which is a red candle with body. Doesn't matter the wick upper or lower. Of course, I mean, if there is a strong red candle, then definitely, the trend continues. In that case, your alert is voided. You don't have to do anything. You just continue with the trend, whichever trend you were in. Okay, so that is the second possibility. The third possibility is the candle after the alert which got created, which got formed, was neither a confirmation candle nor a void candle. So let's say the second candle was also an alert candle, also a doji. So doji after doji, very much possible. You got another doji, or you got a reversal candle, but you audio not coming. Am I not seeing? Okay. Is there any problem? Any else facing audio not being there?
Audio is clear. We
Okay.
can hear you loud and clear.
Sarafraz, I think it may be issue.
I think there is some dog barking noise at the back. So I don't know whether it's in your neighborhood or some other participant's neighborhood.
Not mine.
Okay. So then somebody else has to switch off their and put themselves on mute.
Let me just try to mute all once more. Okay. So I have muted everyone. Hopefully that will be fine. And, let me just quickly look at the chat. Is it still not audible? Nanda?
I think so. Sarfaraz got it.
Okay.
He's audible now.
Okay.
You are loud and clear to me, Dheeraj. So,
okay, great. Let me continue.
Just one little thing before you continue, Dheeraj. While you're explaining the theory, I'm sure you'll take us to the charts and show how all these rules work, right?
Yep.
Yeah.
I'm just finishing this and then I will.
Yeah.
Okay.
So we'll read out every rule and tally it on the chart.
Sure.
Yeah.
Okay. So I was on the third thing where we get another alert. We neither get a confirmation nor it is void. So in that case, we now start comparing with the new alert. So your alert gets moved. Okay, you forget about the previous alert. Now, whatever rule you are going to apply on the next candle will be applied on the new alert. Okay, so I will show you, of course, as we discussed. Now, when I do positional trading, I look at the daily time frame and use 15 minutes for intraday. Sometimes, if I'm itching to take trade, which is not a good practice, but it happens with many of us, then I may even switch to 5 minutes. Okay, but typically I think 15 minutes is a better thing to look at when you're following this method for intraday, right? Of course, as is true for any trend following system, the challenge comes when there is a choppy market, there is a flip-flop. In that case, your SL gets hit. Okay. The third thing which I had mentioned before, that instead of just using the exit by whatever method I described, you can also trail your SL using fractal. Most of the time it coincides with that, but sometimes it gives you an earlier trail SL. So I'll show you that also. Okay. Now, following this, you can of course go and trade in future, or you can go trade in the cash segment. It's perfectly valid for both cash and the future. Okay. But again, if you want to be an option trader and you see that the strong Heiken Ashi candles are getting formed, and I have given you the definition of strong, you can go with option buying. If you prefer option selling, you can take a strike, which is, I look at 30 delta, or if it is intraday, I even do ATM. But if it is positional, I look at 30 delta or below. and you can do that. So it depends on your individual style. Okay. Now with that, let me go to the actual chart. Okay. So I can actually hide this one, but just for a moment. Okay. So this is the Nifty chart. Okay. And for a moment, let me hide the fractal also. It is distracting you. Okay. All of you hopefully are able to see my trading view chart.
Yes, we can see.
Great, great, great.
Do also explain what this fractal indicator is, because I
I
saw
will
it for the first time.
I will come to fractal. But before I come to fractal, let me explain the Heiken Ashi properly, right? Because I have given you the theory. I just want to ensure that I show you on the chart. Okay, so
We
let's.
are all ears.
Okay, great, great, great. So let's say that we somewhere we have to start. Okay. So let's say, okay, you want to start somewhere which is closer date. Anyway, doesn't matter. Okay. Let me start something which is closer. Okay. So let's say that you started your trading on 13th of September. Okay. So 13th of September, the trend is bullish. But of course, you started that day. So you want to take your first trade on a reversal. Okay. You don't want to, run and jump into a trade. I mean, if you do that, it's a different story, right? We all do that. But for the sake of explanation.
Neeraj, please mute everyone once again. Again, that dog barking sound is coming. So somebody's microphone is on.
Okay, okay. Just 1 second. Where are the participants? Okay. Okay, great. Okay, so I said that we started on 13th September. Okay, and this is the Heiken Ashi candle. So you go to candle, and I think it requires a paid subscription on TradingView, and you select Heiken Ashi. Okay, so this is how you get onto this Heiken Ashi candle. Don't put any other indicators, plain Heiken Ashi, nothing else. Okay, and since I'm looking at the positional play, I'm on a daily chart. Okay, you can do it on the futures chart or a cash. I mean, basically Nifty chart, doesn't matter. It's pretty much up to you. You can apply it. Okay. Now, coming back to 13 September. So 13 September, when we observe it, we saw that these are the green Heiken Ashi candle, the strong Heiken Ashi candles are getting formed before that, right? So the trend was bullish. This is very clear. And I don't want to jump into the trade, so I did nothing. Now go to the next day. This is 14 September. What do we see? That after 4 green candles, strong body, on 14 September, it formed a red candle. But it is not a doji. Okay, it is a red candle, not a doji. Okay, so this gives the definition of reversal alert. I talked about alert and I said there are 2 types of alert. One is a reversal alert, one is a doji alert. So this is a reversal alert. This is where on 14 September we got a reversal. Now we have to do nothing. We just can become cautious. What we can do is that if this low of this reversal candle is broken, that becomes our new TSL, right? So you can trail your stop loss if you were. Of course, here we are not in trade, so that question doesn't arise. But if someone was in a bullish trade can move the trail to hit this level on a Heiken Ashi chart again. Okay, all the things we are doing on a Heiken Ashi chart. Now let's see what happens on the next day, on 15 September. So after alert, I mentioned that there are 3 possibilities. What possibility? What happened here? This is the possibility where that alert got voided. The alert is no longer valid because we got a non-doji green candle. If this candle would have been doji, it would have been another alert and we would have moved our alert to this one. but we got a non-doji green candle. So this particular alert, which was generated on 14 September, is now void. Now we no longer have an alert. I hope everyone is able to follow. Okay. Now see what happened on 16 September. 16 September, you got a strong red candle. Okay. This certainly, is a sign that it has changed, but we are, system traders. If you were discretionary, probably you would have flipped your trade here. But since we are system trader, what we did was in case we were in trade, we would have cut our trade. Okay. But we would have still not jumped into the short trade because this is still an alert for me. It is not a confirmation. So I'm not going to flip from long to short. Of course, the example which I'm saying, we have nothing. 13 September, we started with blank and we are still blank. So I'll still not go with a short trade. However, this is a bodied candle. It's a reversal alert. See what happened on the next day. Next day on 19 September close was below the close of 16 September. So we got our confirmation. When we are getting our confirmation, towards the end of the day, we changed we got into a short trade. Okay, we had no trade. Here, this is
Close meaning the body close. Close
the body
meaning the
close,
body
and
close,
I'm saying
not the
market
wick.
close, like 325 or 320, you will figure it out. Okay, this candle. Okay, so instead of waiting for next day, that also you can do. If you want to be 100% sure, you can wait and not take a trade here. But you can also at 320, 325, because this candle will be more or less formed, you can take a trade and you get into a short trade. Okay, so on 19 September, we got into a short trade. Is this clear so far? Okay. Once we got into a short trade on 19th, what was our SL? Our SL on a Heiken Ashi was this high. Okay. Now, next day, what happened? We got a reversal candle, unfortunately. Okay. And the close was 17,812. High was, 17,805. So here our SL will get hit. Okay. But it is very close. So you can exit that trade. You are still not on a long trade. Okay. Or if this close would have been below the high of this candle, let's say it would have not closed at, we are just talking about illustration here. So instead of 812, if it would have closed below 805, then we wouldn't have cut our trade. We would have continued with our short trade. In this example, we will cut the trade because it violated our SL. Okay. But we are not going long here. Okay. Because we have just got an alert candle and we hit our SL. Now see what happened on the next day. Next day, we are getting another alert. Okay. So if we wouldn't have cut the trade here, this is another alert. And now we are waiting for the confirmation. On 22nd September, we did not get a confirmation. Rather, we got a continuation of the short trade. So on 22nd September, if we had cut our trade here, we again got into a short trade. Or if we did not cut it on 20th September, we continued with our short trade. And then next day, there is no signal. It is a continuation of the trend and very strong bearish trend. Day after that, also very strong bearish trend. After that, also strong. Now you see that, the size is becoming a little lower on 29 September, but it is a strong, still decently strong. On 30th September, we got an alert. Okay, so if we would have got into a short trade on 19th and assume this candle wouldn't have been closing higher, or you are a little bit keeping a SL which is slightly higher. Of course, this is just to illustrate. You could have cut your trade also. And then you would have entered your short trade on 22nd September towards the close of the day. From 22nd September, you would have continued in a short trade till 30th September. 30th September also, you are not exiting your short trade, but you got an alert candle. Okay. Next day, you did not get a confirmation because this green candle is not closing above this, this body high. Okay. as you can see, the close is below the body high of this 30th September candle. So you did not get a confirmation. You continued with a short trade, but you shift your alert now to the 3rd October candle. So your alert is now, whatever logic we will follow for confirmation will be applied on the 3rd October candle. What is that logic? 3rd October was kind of a green doji. If you apply 10% or it is a body, it has to close above the high for us to get a confirmation. We got the confirmation on 4th of October. We went long. So you cut your short trade. You went long on 4th October. 6th October, you were long. 7th October, you were long. 10th October, you got an alert, right? So 10th October, you got an alert, which is a reversal alert. You got a confirmation on 11th October, okay, because this close is below the close of the candle on 10th October. So you got a confirmation. You switched from long to short, okay, and you continued in the short trade for 2 days. Then on 14th October, you got a long trade. On 17th, you did not get a confirmation. So you continued on the short trade. On 18th October, you got a confirmation. You switched to long trade. And since 18th October, we continue in the long trade. Okay. Now see what happened on 3rd of November. Okay. 3rd November, we got an alert candle. So where did we enter the long trade? We entered the long trade on 18th October. Since 18th October, we are long till we reach 3rd November. 3rd November was an alert candle. So we are just alert. We did not flip our trade. Okay, we are just alert. Next day, on 4th November, we got a candle which voided this alert. So right now we don't have any alert. Alert is voided on 4th of November. And now the trend continues. So whatever trade we entered on 18th October, we are since 18th October in a long trade. Okay, you will see the candles. If you see here, someone would have entered into a long trade on 18th of July towards the end. And from 18th of July, even this would not meet the reversal criteria. Okay, you would have just continued and you would have exited on 22nd of August from 18th July. So you would have caught this, this entire move, right? These are the cases where you would have hit the SL. These are the cases where you would hit the SL, right? These kind of consolidation area. These are the area where your stop loss will get hit. But some of the trends that you're getting solid. Like here, you're getting a solid bearish move. Here, you're getting a solid bearish move. This is a solid, from here onwards, from 19th July till 22nd August, you are pretty much long, right? So as again, I'm saying, I'm definitely trying to experiment that how do I avoid these whipsaws, right? I'm trying to look at RSI, I'm trying to backtest with various things. I don't have an answer as we speak. Because ideally I would like to avoid getting into a trade, these kind of situations. But as of now, if I look at this particular thing, there would be cases where you would hit your SL, but you would hit some large trends. And whatever backtesting I've done, if I just look at 1:1 leverage, it will still beat just the Nifty return by 10 to 15% in a year. Okay, so I have done backtesting since 2008, and if even with all the SL and everything, you will beat Nifty by say about 10%. Okay, you can then apply your leverage. You say, I will go 2x leverage, 3x leverage, whatever you want to go. It's pretty much up to you. How do you manage that? That's a risk management part. And this works not only for Nifty, but it will work with any liquid stock. This will not work on illiquid small cap and all that. Any large cap liquid stock, Reliance, ICICI Bank, or anything which is liquid, Bank Nifty, perfectly it will work. Don't apply it on an illiquid thing. Is that clear? Any questions so far? Anyone has any question? Or just give me a feedback. That is all fine. You have understood
So
it.
about stop loss, just repeat, how will you decide on the stop loss once you get in the trade?
Yeah. So once you
And does the second question is, does Heiken Ashi also indicate, as per the rules that you've set, as per your back testing, that on which candle would you exit? Just repeat that, please.
okay. So let me just repeat the second one, because so I will exit on the confirmation candle, right? So here, let's say I was on a long trade. This doji on 19th August was an alert candle for me. And I have given the PPT the rules for the confirmation. On 22nd August, we got the confirmation. So on 22nd August, I will exit the trade. Okay. And I will flip to short trade. So whatever I have described so far is a long shot. You are never out of the trade. And that when should I get out of the trade is what I am trying to figure out. I have not yet figured out. Okay. To be honest. So this, whatever I have described to you, you are either long or you're short. There is nothing in between. So you
Just one value addition out here.
Yeah.
Ashish ji gets on this Khiladi #1 show. And one of the participants who comes on that show along with him, who spars with him on the show, is a guy called Vibhor Varshne. He has made a video on this Heiken Ashi candle. I don't know whether you are aware about it.
I've seen that video.
Yeah. So I've seen that too. And maybe you could backtest what he has to...
I think his Heiken Ashi has issues.
Sorry?
I have seen that video. I have looked at it. I think that has certain issues. It is not as robust as what I am describing.
Acha. Okay. Okay. Fine.
Okay.
I thought that you must have seen that.
Yeah.
Go ahead. Go ahead.
Yeah. Okay. So that is so you mentioned about SL. So the day, let's say I go long here on 28th July, the low of this candle become my SL. Okay. And then I will not do anything. I will wait.
Low of your entry candle.
Yeah, because I'm in a bullish trade.
Oh.
Okay. And then I do nothing. Pretty much I wait for this alert candle. Once I get the alert candle, the low of that alert candle becomes my SL. So I move my SL to here. Till that I keep on, riding the trend. Okay. As simple as that. Because as I mentioned, right, it is a long shot. So you are not in between there. Either you're long or you're short. So whatever is the exit rule also becomes your SL.
Yeah. Only thing that was crossing my mind right now, Dheeraj, was the whipsaw candle. Have you figured out how does one tackle that?
That is what I mentioned, right? That is the challenge. Some of the right, because what happens, sometimes you give up the gain.
Yes.
Here, I got the confirmation only on 22nd August, right?
Yeah.
So I was in a heavy profit, but some gains I gave up.
Right.
Right. Now I'm trying, and you can also try, and you can. May I know who was speaking? Sorry.
Yeah, this was Firdaus.
Hi. Okay. Hi, Firdaus. So sorry, we have not talked so much on the call. So Firdaus, see, one of the things which I'm trying, but again, I have to do a lot more backtesting, is seeing that if I flip to a shorter time frame for exit. Okay. So this is a daily candle. So I take my entry on a daily candle, but I exit on a, let's say, hourly candle or a 75-minute candle. Okay.
Okay.
I don't have the exact answer, but that is something which I'm trying, because definitely I'm trying to see that how you improve the thing, but without doing anything also, you are beating Nifty by 10 to 15%. That much I can tell you.
As per your total set of rules.
Correct. Whatever rules I've described.
Got it.
Okay. Now, one thing which I have experimented with, that this is all about trailing stop loss, right? So can I improve on my trailing stop loss? Instead of exiting here, can I keep on trailing my SL? So for that, I use the fractal. So fractal is nothing but, if it is a 2 fractal, I mean, you can change this values, but I use 2. You can look at here the input, right? And you can change the period. So what it does is a fractal will get formed, right? When a green fractal will get formed if the high is higher than the previous candle high and the next candle high, both, right? And it will get formed only after the next candle is created. Okay. So the only thing I thought was that if I'm in a bullish trade and let's say a fractal is getting formed. So assume that I was in a bullish trade here. Okay. On let's say 19 July, I got into a bullish trade. And I see a fractal getting formed on 25th July on a 22nd July candle. I will move my trail stop loss to 16,456 level. Okay. So I will trail it rather than if I didn't have fractal, then I would have waited for 26th July candle to get formed. And that candle low becomes my trailing stop loss, right? Slightly better result, not like drastically better result than whatever I just described. So here the rule is that, if I'm in a bullish trade, so assume for a moment, assume that we were in a bullish trade here. My first SL is the low of this fractal. Then I trail the stop loss to low of the next fractal on 27th June. Then I trail the fractal to the low of 8th July, right? So that is how I keep on doing it, okay? And similarly on the short trade, you will look at this this fractal thing, okay? So that's pretty much I had to share on Heiken Ashi. And essentially the reason I talked about Heiken Ashi was that, as I mentioned, I try to be doing my option trade also in the direction. If I'm seeing the strong candle getting formed, I can even do an option buying setup. As it starts becoming weaker, get out of the buying thing and get into a selling thing and exit your sell also when you see the trend reversal. Okay. So that's pretty much on the Heiken Ashi. I hope.
One question before you move to the next part. When you say, this is my personal confusion because I'm not tech savvy. When you say back testing, what do you employ for back testing? What actually do you do when you want to back test? Do you do it manually, physically, or do you do it through writing a code?
So we write the Python code for that, right? Python or VB script, both work, depending on whoever is familiar with. See, Python has a lot of libraries. So, there are inbuilt functions for Heiken Ashi, super trend, or whatever you want to apply. Okay. So Python gives you a lot of inbuilt function. TSL and trail surprise I explained. Sorry. So yeah. So to answer your question, I use Python code.
Okay.
Okay. But see, sometimes what happens, that code may have defect, right? So when I get the output of the Python code, I visually inspect at least a few samples and see if there is any challenge and debug it, because that's the only way I can debug. Right.
Correct.
So for debugging, I look at actual chart the way I was showing you, and as long as I see that my thing is matching, the output of the program is matching, I'm perfectly fine. Advantage of the program is that I can do a Monte Carlo simulation. I think you guys may be aware of the Monte Carlo simulation.
No.
Okay, so we'll not get into a detail. Look at it. So for example, see, right now I'm saying that I started in 2008 and I've tested it till 2022,
Correct.
But how do you say that randomly? You can start on any date, right? There is nothing which tells you that you would have started on a 1st Jan 2008 or a 1st Jan 2010. So how do I simulate that out of all the days between 2008 to 2022, assume 1,000 different scenario where you can start on a random date. And if you would have started on a random date, whether you would have made money, whether you would have beaten the index or not, how do you do that? So that simulating that is part of the Monte Carlo. There is a technique for that simulation. So you can apply that Monte Carlo simulation. All those things you just cannot do by manual observation. I know one of the FinTwit influencers, he had mentioned about deploying 10 people and he pays them and he does not believe in the programmatic backtesting. But I personally think that is a brute force way, very difficult. If I have to run 1,000 simulation there's no way on earth I can have 10 people looking at those 1,000 dates and doing it. Okay.
Okay.
So anyway,
Maybe once to perfect the code, that exercise is necessary, but then it should perform.
so that you have to do testing. Na?
Yeah.
I mean, you can have a bug in the code, right?
Yeah. Manual testing to karna hi padega.
Correct. Yeah, great. Any other question? Let me see the chat. 5-minute time frame. Yeah, I mean, SGX Nifty. You can check. I mean, you can check. Let me just see. Just 1 second. How do I move out? Sorry. Okay, you want to see SGX Nifty. Where is it? Or let's say you look at, Dow Jones future, which is live, right? And you change it to a 5-minute chart. Okay, let me remove the fractals. Okay, so this is your 5-minute chart. Okay, assume that, whenever we started, let's say we started somewhere here, okay, at 9 o'clock today, instead of coming for this, you said, well, let me start trading Dow Jones futures, right? So you see this is a green candle, right? You don't do anything. You get an alert candle at 9:15. That alert candle at 9:20 is another alert. It does not, you remember 3 conditions, either it will violate or it will give you a confirmation or it will be another alert. So in this case, the third condition got fulfilled. At 9:20, you got another alert. At 9:25, you still, if you look at the low of this alert candle, that is 32854. Close of this was 32855. You still did not get the confirmation. So you didn't do anything. You looked at the next candle. This is another alert candle. Then you look at the next candle is another alert candle. 9:40 is when you got into a short trade. 9:40 candle is closing below the low of your 9:35 alert candle. So at 9:40, you will take your first trade today in DJIA. Okay. After you take your trade at 9:40, you do nothing. You just keep on moving till you get to 10:20. So 10:20 is when you got an alert candle. 10:25, you got confirmation on that alert. You flipped it. After you flip, unfortunately, you got another alert and you had to flip your trade to short trade at 10:35. This is where you lose money. So you lose money here. You continue. So as you can see, there would be instances where you lose money here, Dow Jones. But here, right now, you would have entered at 14:55. 14:55 you would have entered, and then you see the move that you would get. Okay, I hope this answers that question. Pulapalli, right? You had a question. Okay, I hope I'm answering. So we have taken more than almost an hour. I know I did this specifically on request from Hussain to talk about some of the option strategies. So let me move to some of the option strategies that I follow. Okay, and I'm very sure many of you are pretty versatile option traders, so don't need too much, but still. So as I mentioned, all fine. Should I just continue?
Yes,
all
please.
fine. Yeah.
Okay, great. Okay, so I personally trade with a directional bias in 2:1 ratio. By that, what I mean is that in the direction, I will have 2x the quantity of the other opposite direction. Right? Doesn't mean that I have no opposite direction. The other thing I will talk about is VIX. If the VIX is less than 18, I'm okay with the non-directional strategy, but I never apply non-directional strategy if VIX is greater than 20. As simple as that. So between 18 to 20, I do some jugglery. Okay, still will have some trade in the opposite direction, but above 20, I pretty much ensure that I have trade in one direction. If it gets SL, okay, accept the loss, move on with life. Okay, Otherwise, adjustment becomes too cumbersome. Okay. So once you have spotted the trade, personally, I never go over 75% of the margin, even during intraday. Only exception are some of the expiry days. Sometimes I go over that, but I try to keep it within control. Okay. Personally, I trade mostly in the index option, which is 80% of my trade would be in index option, 20% in stock option. And on a day trading, I typically go very close. It sometimes backfires, but I go very close. ATM or just 100 strike either side. But positional, I go 10, 30 delta or even 10 delta. 10 delta gives, obviously much easier, as long as you can handle the MTM swing. Because sometimes even in the 10 delta, the MTM swing is very high, and you need to just have a very thick skin and just stay put. Okay. If your direction is right, then it helps. Okay. I mean, those are some of the things. I mean, of course, I'm improving every day, trying to apply more systemic thing. And, particularly once I get into a fund, there are a lot of restrictions related to the leverage that you can take, which is different than the individual account. So I have to take care of that also. Okay. Now, this is just the basic, and this is just me. I mean, you may have a very different system. Okay. Now, what do I do? So this is where I will show you some chart. Now, once I determine the underlying trade, and typically I rely, one is Heiken Ashi is what I showed you. I'm using more and more of that. Otherwise, super trend used to be my favorite. So either super trend or Heiken Ashi, it gives me the thing. Of course, once I learn better on the wave theory, that definitely is a much better way to probably tell you the trend. But whatever be your setup, let's say you say that, look, this is a bearish trend or a bullish trend. Then if it is a bullish trend, you go to an option chart, right? Which is like you will either buy a call or you will sell a put. If the trend is strong, which you can look from RSI, or you can look from the type of candle that Heiken Ashi is forming, I just explained. If the trend is very strong, just go ahead with option buying. Trend doesn't look so strong, better to do option selling. Okay, that is what I follow. And then I move to the option chart. Once I have selected the strike, I look at the option chart as opposed to the underlying chart. Okay. Now, these are some of the things I look at, and I will show you the chart of Zillow. Okay. So on the option, I look at Heiken Ashi candle as well as the normal candle. Okay. And apply super trend. So Heiken Ashi
option chart ke upar bhi Heiken Ashi candle one can apply.
Yes. Yes.
Okay.
So, if you remember, Ashish ji has talked about super trend, correct? On a normal candle. And he uses, I think, 7-2 as the super trend, right? And be in the direction. What I have seen is that is definitely one of the ways. But you can just apply all the things that I talked about Heiken Ashi on the option chart and follow Heiken Ashi for your trend. That also is a good setup. But right now, what I do is, I do both just for the confirmation and see, are they kind of in sync? So that is the first thing I do on the option chart. That is the trend on the option is matching with the trend. And in fact, the Heiken Ashi works better on the option, because many times the trend would have switched from bearish to bullish on the underlying. But because of the theta decay and because of things coming closer to the expiry, many times your option continues to be in the bearish trend. So you can just ride it. Let's say, just to illustrate, let's say Nifty was at 18,000, okay, and you had sold 17,500 put. Now Nifty may fall from 18,000 to 17,700, and your Heiken Ashi on the Nifty chart will flip from bullish to bearish. That does not necessarily mean that I need to square off my 17,500 put, which I had sold, if my expiry is either the same day or it is just a day away. That is the time I can check the Heiken Ashi chart on 17,500 put and see if it is still bearish. I can continue with my my sold. Sorry. This I'll just fall. Okay. Yeah. So are you guys able to hear me? My screen
Yeah,
just
yeah.
fell down. Okay.
Yeah, you're loud and clear.
Okay. Great. So that is the first thing I look at, right? Which is bullet number 3. The second thing I look at is the OI data. And on OI, I apply 20 period moving average on the OI, simple moving average on the OI. And I will come to that setting. So this is the second thing I look at. And the third thing I look at is RSI. And when I look at RSI, I don't apply RSI on the Heiken Ashi candle. I flip to the normal candle and look at the RSI value. Because Heiken Ashi itself is a little bit lagging. You apply any of the indicator on the Heiken Ashi, that becomes even more lagging than it normally is. Okay, that is the reason. So, and the fourth thing I look at is VWAP. So what I look at is the candles, both Heiken Ashi and the normal candle of the option. I look at the OI and the 20 SMA on the OI. I look at the RSI and I look at VWAP. These are the 4 things I look at after determining the strike, which I want to buy or sell. Okay. And my option selling setup is that my super trend should be bearish and Heiken Ashi should be bearish. This is the selling setup. Price should be below the VWAP. OI should be increasing and above 20 SMA on the OI. RSI should be below 40. These 4 things should be there for me to enter into a short trade, basically sell an option, right? So these 4 things should match. I look at a 5-minute time frame on intraday and 1-hour time frame, which is positional, right? So that is what I do. So same thing. If it is a positional trade, you do 1 hour, and if you're doing for intraday, 5 minutes. And you're getting very jittery, then your positional you want to exit that day. You know the market is going against you. That day you can switch at a 5 minute and you can take an exit decision if you want. Perfectly fine. Okay. I hope that is clear what I'm saying, right? I mean, you were in a short trade and suddenly the market has turned bullish from the morning. You don't want to wait for 1 hour. You can flip to 5 minutes, and on 5 minutes, it has given you a flip. You can exit your trade. That's perfectly fine. Okay, so these are the 4 things I see. How do I exit? I don't exit if RSI alone goes above 40. Okay, I don't. I mainly look at the trend turning bullish, right? Or my SL. If it is intraday, I have a tighter SL. 10 point. This I'm talking about the premium, right? Not on this 10 point is not on Nifty or Bank Nifty 30 point. This is on the premium which I have got. So on the premium, let's say I sell something at 60 rupees premium or 40 rupees premium. And as I mentioned, when it is intraday, I go ATM or very close to the ATM, both for buying and selling. Even for selling, I don't go very far on the intraday. I go far only for the positional. Intraday, I'm a little more, risk taking from that perspective. So there I keep 10 point SL for Nifty and 30 point SL for Bank Nifty. Or if I see my this thing, this is for intraday. For positional, I look at this turning. Is this clear?
Yep.
Okay, so let me show you quickly on Zerodha. I hope I have that open. Okay. So
One question, sir.
Yeah.
When you do intraday selling, do you do it for near expiry, or you still play 2 weeks or a monthly expiry?
I do near expiry for selling.
Okay.
Yeah.
Okay.
Buying depends if it's very close, but typically I stay with for all my intraday, I stay with the current expiry.
Got you.
Okay. Yeah. So this is the setup. I mean, let me just look at, how I started. I thought 18,600 is like a, what do you say, all-time high. So this month, 18,600 will not get violated. And now we don't know. So you look at the character of 18,600. Let me show you first on positional on 1 hour. Okay. So 18,600, you clearly see that, from 25th October, there is no way you could have sold 18,600. Even though that time 18,600 looked pretty far, it is not meeting any of our conditions, right? if I just change the candle, just 1 second. Let me first look at, sorry. Look at the normal candle. Okay, then I'll go to Heiken Ashi. Right. So there are times when on 1 hour it has turned bearish, but you see the RSI condition was not being met. RSI has to be less than 40. Okay, so you can clearly see that I have this OI. This is the OI. This red line is the 20 SMA on the OI. I hope you guys know how to put an SMA on the OI chart, right? You can go here. You can do open interest, and you can select moving average. Once you select moving average in the field, you select OI as the field. Okay. Otherwise, it will be HLC 3 or 4 or something like that. If you select OI, this moving average will plot on the OI chart as opposed to on this chart, on the candle chart. Okay. So this is the OI. As you can see, the OI has been going up. So there are still option writers who think 18,600 will not get taken out, but your RSI is pretty much not giving you that entry. For a very brief period, you got it 40, but otherwise you can see from October 18th or 17th onwards, nowhere our RSI has gone. I mean, all the conditions which I talked about has not been met. So we wouldn't have done it. Okay. Same time, you look at this 18,000 10th November expiry, right? How beautiful you would have got into a trade, right? On 28th September, I mean, of course, 28th, you probably wouldn't have sold 10th. But whenever you saw that, right? Let's say even somewhere on 1st of November or, it's pretty much, you can see RSI is consistently below 40. This OI had been increasing. I don't know what has happened yesterday. I think people were booking some profit here and moving to maybe even closer strike, but it is still above the 20 SMA. So as long as it is above the 20 SMA, you can be fine and you can just run this trade. Just look at this short trade. Okay. If you wanted to do the same thing yesterday, 5 minutes. Okay. Clearly, you would have started in the morning. You could have gone short and you had to exit at 10:55 with whatever SL you were taking. You had to take your SL and then you would again go short at 2 o'clock on this. If you were tracking this 18,000 at somewhere 40 rupees, you would have sold this option and you would have been sitting on 21 rupees profit. Okay. And then depending on you. So essentially, I think I have described, right? I look at this chart. Let me just change it to Heiken Ashi display, right? You see Heiken Ashi. See some of the trends here. Okay. You can just keep, let me change it to 1 hour. Okay. Just look at, you would have entered the trade on 31st October. And then pretty much none of these would give you exit. Here, you would have exited for a while, after making a fabulous profit. Okay. And then again, you would have got into a short trade on 3rd of November. And after 3rd of November, after you would have got, so 3rd November, 2:15, you would have got into a short trade. Let me look at the normal candle. 3rd November, 2:15, right? So 3rd November, 2:15, 122 rupees, becoming 19 rupees.
Once again, there's a lot of background noise. Please shut off everyone's microphone.
Okay, great. Okay. So you can see, I mean, of course, a lot of charts look great. How many of us would have taken here and trailed it, but you would have been sitting on fabulous profit. Okay. So here we will have to look, whether you would have spotted 18K strike or you would have spotted maybe 17,500 strike. But one thing is very clear, that you would have cut your short trade much earlier. Okay, that I think you would have certainly done. Any questions anyone has so far? Let me see. So I think Krita, you had a question, right? In the system, it's a very good question you have, that how will you put it in the system, because your thing is different. So I have not figured out a way to put it in the system. Okay, that probably is something which I need to figure out. Right now, if it is a positional, because it is daily, I'm able to do it on a daily candle, right? Okay, so that
When you go positional, you would have to again put in your stop loss limits and everything in the system every day morning, right?
Not really. I mean, you can exit on that day, right? Because you are exiting after all that alert and confirmation.
No. I'm talking about something where suppose you've taken a positional trade with a 5-day horizon, and you're still in the trade on day 2, and you still plan to continue because the market, let's say, assume is going in your direction. And if you are putting, and the day gets over, now the next day starts, you have to again put in your SL limits and everything in the morning, right?
Yeah, so essentially what I'm saying is you don't need to be there in the system, because here once in a day you can visually check, and toward the end of the day you're taking the close, right? I mean, sorry.
Okay.
Toward the end of the day you are taking the trade, so
Yeah.
you can just do it manually.
Okay.
Right? That's what I. Okay, but Kritarth, I mean, I will figure it out. I think it's possible to figure that out. We can convert the HA level. I mean, it's just that I have not done it. But I think converting HA level to a normal level is very much possible. Let me look at that formula, and it's a good thought. One should do it. Since I was managing this pretty much on the screen, so I have not done it. But you can convert it.
But the HA chart does show the regular candle value.
It does. But at that, it's ultimately a computation, right? I mean, on a live market, it shows. I have to check, whether you see that value otherwise. Ultimately, it's a arithmetic, right? I mean, you should be able to convert. All I'm trying to tell is that I have not done it. But it is very much possible. Yeah. So, yeah. So that is one. Hussain, you had any questions? I think we had. So this is one thing, right? Now, this one is something which I have looked, there are some guys who are famous YouTubers called Telugu Brothers. Okay. I don't know how many of you have seen their video. I think their model worked very well when this market was not so choppy, but sometimes I follow that model. Okay. So this is the positional non-directional short strangle strategy. Okay. And pretty much taken, I had heard about it when they talked in the face-to-face, right? So let me give the credit to them. Of course, they may have also learned from someone. So that's how it works. Here, a few things I apply. For example, I don't do it in a high wicks thing. If it is less than 18, you take the trade on Friday, sell 30 delta call and put for the weekly expiry, right? So Friday, you're taking the trade for the Thursday expiry. Now, this requires, in most of the cases, it requires quite a bit of adjustment. So what you do is you have sold both put and call. You don't do anything till, let's say that, since they are both delta, the premium that you are getting is more or less close to each other. So the put premium is in the 40 to 50 rupees range, if I can talk about Nifty. Similarly, call premium will also be in 40 to 50 rupees range. So assume for a moment that both the premium was 40 rupees. So you got 80 rupees premium, 40 rupees put, 40 rupees call. Now the price is moving. You will not do anything till one of them becomes double of the other. So for example, market starts moving up. So the call premium will start going from 40 to 45, 50, 55. And the put premium will start falling from 40 to say 30, 32, 33. You hit, let's say, 28 rupees on the put and 56 rupees on the call. That is when you need to apply the adjustment. So you essentially don't do anything till one premium is not at least twice of the other premium. But as soon as one of the premium becomes twice of the other premium, you need to take an action. And the action is that you exit the winning leg. So in the example that I'm giving, market starts moving up after we created that short triangle. So the call premium starts going up, put premium starts falling, and both were 40 rupees to begin with. But put premium became 28 rupees, call premium became 56 rupees. So we have 16 rupees loss on the call, we have 12 rupees profit on the put. This is the scenario. What we will do is we will book 12 rupees profit on the put. Okay. And pocket that. And then I will look at the put option, which is 80 to 100% of that 56 rupees. So I'll look at somewhere closer to 55, 50 rupees, 52 rupees, 55 rupees. I'll see which strike, which put strike is trading at that. Okay. So I will take a fresh position in that strike. So I have already booked 12 rupees. I have an MTM loss of 4 rupees because the call is giving me 16 rupees loss. Now I move my position to a put strike, which is trading at say 80 to 90% of the call premium. So 56 rupees, let's say 50 rupees, whichever is the, and I try to do it with the 100 rather than doing with the 50, but again, depends. So you do that, you roll it over. Now assume that now market starts falling. Market was going up, market starts falling. Now what will happen is your call premium will start going down and put premium will start going up. So your put was at 50. Now 50 will become 55, 60, 65. Call will start moving from 56 to 52, 48. And let's say you enter a situation where the call premium becomes say 40 rupees and put premiums become 80 rupees or whatever, 36 rupees and 72 rupees, something like that. Again, this time you book the call, the profit in the call. Okay. And then you roll over the call, bring it to 80 to 90% of the put premium. You keep on doing it. As soon as you realize we started with 80 rupees premium, once we make 63 rupees, 60 rupees premium, let's say 50, I mean 60%, 70% of the premium, 50 rupees above, we are in the profit, exit the position. Doesn't matter where you are, right? Which day? It may be Tuesday, it may be Monday. Most likely many times you will get it on Tuesday itself. Just exit. Book your profit. Or by doing all that, now you start coming closer, right? I mean, earlier the strike were, let's say 500 points away. Once you start doing the adjustment, you start coming closer to the strike. If it becomes a straddle, you exit. Okay. I mean, I sometimes get into a reverse strangle and all, but I don't advise that. In this, you can also get the margin benefit by buying a FAR OTM. So let's say you are selling 40 rupees put, you can buy a 5 rupees put or 6 rupees put. Okay. That will reduce your margin requirement. I don't do it because of the capital is kind of little high and that increases my risk because the quantity becomes too big, right? So this is one of the strategies, which is a non-directional strategy, requires frequent adjustment, applying the logic which I mentioned. So I say that someone who can spot, that is the thing, right? So this is the non-directional. Now the question I have from Hussain is on the CE spread or a PE spread, right? So essentially, Hussain, if you, whatever I described, or through wave, whatever, if you are very sure of the trend and you know that the trend is bullish, okay, I many times, again, depend on what you're selling. So if the VIX is manageable, like 16 to 18 kind of range, and you are bullish, you can even go and sell a naked put, or you can create a put spread to be on a safer side. Okay. And if it is bearish, then you do the same thing, the call. I personally create a credit spread. I don't create a debit spread. By that, what I mean is that I sell the closer leg and buy the farther leg. So I get net premium. So it's a net credit fund. So I do the credit spread. Opposite is that, if you are very confident and the trend you have spotted is strong, you can do a debit spread, which means that you are going to buy the closer leg and you are going to sell the lower leg. I mean, not the lower, but the farther leg, lower in terms of the premium. You will pay money to the market. So right now, let's say that you are saying through your wave or whatever, you are expecting 18,600 on Nifty. If you're expecting 18,600 on Nifty, what you can do is you can buy 18,300 call and you can sell 18,800 call, right? Or, depending on where you want, how far, how much risk, and how confident you are of the trend. So through your trend spotting system, if the trend is strong, you just go ahead and do that. So if you say that, it is an impulse pattern, but you probably are not going to be that aggressive when it is a triangle, right? Just to take the wave example. Similarly, if I look at the Heiken Ashi example, if my candles are strong bodied, single wick on one side, I will do that. But if the candles are smaller, wick on both the side, I will not do it, right? So you need a gauge of the strength of the trend. You can also apply ADX. So just to summarize this, what I am saying is, through your trend spotting mean, if the trend is strong and you are an aggressive trader, you create a debit spread in the direction. So if it is a trend is bullish, you create a debit call spread. Trend is bearish, you create a debit put spread. And you do the reverse if you are little less risk taking trader and not 100% sure of the strength of the trend. Trend is weaker, which means ADX is less than 25, VIX is around 16, or if it is Heiken Ashi, the smaller bodied candles are getting formed. It is either accumulation or a distribution zone. I prefer creating credit spread in that scenario, not a debit spread. So it is reverse, right? I mean, if I'm bullish, I create a put credit spread. If I'm bearish, I create a call credit spread. Debit spread is reverse of that. I hope I'm able to answer your question. Yeah. So that's pretty much it, friends. That's all I wanted to share. Sorry, one last thing, if there is some time. On the stock option, right? I try to take position a week before current expiry for the next month expiry. Trade only in the very, very liquid Nifty stocks, right? I personally like bullish bias. I don't try to short. I think I should do it in some other day. It's not something which I should rush through, because I use something called an option wheel strategy, right? An option wheel strategy is one strategy where people charge you 1,000 rupees for a webinar and 2-hour webinar, right? So I should not try to do it in 2 minutes. Okay. Yeah, but all I'm saying is that stock options are only monthly. So do it only in the liquid stock. Be clear of the trend. And the decay is very fast, 5 week to 4 week, 3 week. That time I have seen in the stock options, there is a sizable decay. So if you're an option seller, you sell 1 week before the expiry, in that week leading up to the expiry of this month, but you sell the next month expiry with a 6 to 10% ROI or 5 to 10% ROI on the margin deployed. Okay. So assume that you are deploying 1 lakh rupees, then you should be getting 5,000 to 10,000 rupees as your premium. Okay. That decay is pretty fast. And then, if the trend goes in your direction, the decay in that week to the immediate week after the expiry, that 4 or 5 days, the premium decay is pretty fast on the stock options. Yeah. Yeah. And, I like this quote from Jim Simons, I should not be putting it. I mean,
just flip the earlier screen, please.
Yep. I'll share this presentation anyway in the PDF. I'll share it. Any questions on this? Shall I move on?
Yes, you may.
Okay. Yeah, that's pretty much it, friends. Thanks for everyone for joining. And this is my thing. I will share this again. I have an NISM certification, but yet I don't have a SAVI certification. So from NISM, I've done the RA or whatever certification. That's all I've done. Let me stop sharing. Let me stop recording to, okay, whatever. I hope it recorded. We'll see. So that's it. Thanks everyone for joining. I will close the call and I'll share this PDF in a PDF format on our Telegram. You can share.
I just wanted to say thank you so much for doing this on such short notice. It's very, very kind of you.
Great.
And I'm looking forward to seeing the recording to better understand the spread and the stock option.
My pleasure. Thank you so much. Thanks for being the initiator. Every
Thank you
time
so
you
much,
talk,
guys.
you also learn yourself many things. And
Yes.
I know there are many expert traders here and, wave experts. So, I would look forward to learn from each of you as well. That's why I said learning with friend is our series. Yeah. Thank you so much. Thanks.
Thank you. Hussein, what's up with you? What are you on to right now? Tell us that in 10-15 minutes.
Sorry, I didn't get the
The
question.
boom guy.
Yeah, it's a little exciting when you get things right. It gives you a little euphoric
I love to
feeling.
read
So,
that message.
एक तो कहते हैं ना कि डर डर के यू से कि भाई ये टारगेट हो सकता है और फिर वो मिल जाता है तो it's a little exciting.